Greetings, everyone. I'm excited to welcome Nilo, co-founder at Inven. Nilo, welcome to the show.
Thanks for having me, Ben.
Hey, great to have you here. And I said before, I'll let you pronounce your last name if you like, but yeah, looking forward to the conversation today.
Yeah, excited to speak with you. So it's Nilo Pirttijarvi. Exactly. Okay. So probably not the easiest one.
Yeah, not the easiest. But yeah, let's dive right in. Tell us a little bit about your background.
Yeah. So I'm one of the co-founders at Inven. My own background is a lot in the kind of M&A space. Did my stint at McKinsey, did some investment banking, leverage finance work at Nordea, but now kind of focusing on all of the commercial efforts here at Inven. So sales, funding, customer success, all of that is kind of where I'm putting my focus. Prior to my M&A consulting banking world, my background was in startup world mostly. Slush was a big part of my growing up and that kind of stuff.
Okay, so worked at some big companies in kind of that finance consulting background. And then is this your first startup then as co-founder?
Yes, exactly. I don't know if I can call the test we did with my 7th grade with my best friend startups, but I guess first real startup, that's what I'd call it.
Yeah, an early experience with the startup world. So appreciate that. Well, let's talk about Inven. Tell us the products and or services that Inven offers.
Yeah, exactly. So we're like an AI-powered deal sourcing tool. And the core thing where we are really the world's best is when you need to find like acquisition targets or do analysis of a company, we're really good at that part. So our customers are then private equities, investment banks, industry M&A teams, anybody in the M&A world really in any way. That's when we are really good. And the part specifically, like there's a lot of nuance to it, but the part where we really shine is when you need to build or like a very specific niche you want to analyze or find. That's where we're really the world's best. And that's the nuance of it, at least.
Okay. And it makes sense that you have the startup based on your background, but where did the idea come from? Was there just a pain point in your journey at McKinsey or investment banking, or was it towards, yeah.
So the very original idea came when my co-founder, Tommy, was working in like an investment banking, doing a buy-side project. And I don't know if you've ever done that project where you're looking for add-on targets and you just build a list of like thousands of companies and you go through those companies one by one. That's the original idea. And then we came across the same issue in a lot of other companies we worked at. I came across the same issues at McKinsey, my co-founder at BCG, Nordea, and all of our friends were having these same issues of like really struggling to analyze companies, find the right data for these companies. It was very manual work. And that's kind of where we knew that there's a way to do it better, hopefully, at least.
Okay. Yeah, that makes a ton of sense. So what is your ideal customer profile then? Is it the like large M&A banks, investment banks, small? Tell us a little bit about the customer profile.
Exactly. So the nuance is that in the middle market space, that's where we really shine. Because if you're a Goldman Sachs, you're going to find the buyers for a business or who the players are in that industry. That's your job. But then when you're talking of like a mid-sized HVAC installation company in Texas, there's no way you can find all of those. And the buyers could be anywhere as well. So whenever it's like a global search or it's a very niche thing and that's where it shines, but then in the end, anybody who's analyzing companies in general, they have to do the kind of search like who are the competitors of this niche industry that I'm now looking into. That's where it really shines.
Okay. So helps fill up those kind of the deal pipelines, deal sourcing, finding the right, either where it's a platform or add-on buy to an existing
Yeah, exactly.
company.
Or like finding buyers, there's specific searching for module or finding multiples for companies and comps and that kind of stuff. It used to be very strict, that we did that one thing of finding add-on targets. But, when you want to find add-on targets, you have to add all the data points for these companies. And now it's a lot more also about just analyzing markets in general and getting it easily into like a PowerPoint format or something like that.
And previously, do you think these middle market banks, were they relying on just the Rolodex that they've built over time, their contact list? And do you think now, if they're still doing that, are they at a bit of a disadvantage? Because now, say firms using your product just have much, can run a better process or find better buyers.
Exactly. So you will typically what our customers see is that when they're building their list, for example, of buyers, you end up finding a lot of buyers you would have otherwise missed out on. And that can be like really valuable. And it's that, I don't know if you've done the kind of investment banking where it's that awkward moment where the customer asks like, why was this company not included in the list? Hopefully that's not happening as often through kind of better analysis and better tools for that purpose.
Yeah, it makes sense. As a CFO, been more on the company side of, well, selling a company
Yeah.
or exiting a company. So yeah, familiar with that process. So what year did you found Inven?
So we founded the company like 3.5 years ago. And it started like we really started like at the beginning of the year. We like decided like, okay, after the New Year Eve's party and after that we were sobering up from the hangovers, etc. The next day we come to work and then we start the company. So it's really like
Okay.
I think it was like 2nd of January or something like that.
Okay. So like 2022 or so, or
Yeah, I think it was 2022. Yeah. Yeah. 2022 beginning. Yeah.
yeah. Yeah. Okay. Okay. So 3.5 years in. And let's talk about fundraising because you've raised some capital. So how much have you raised to date?
So what are we now at? Like 12, 13, 14 million, something like that. I have to add up we've done like 3 rounds in essence. So we did when we first started the company, we raised 125K round. I don't
Mhm.
want to pre-seed, friends, family, fools, whatever you want to call it, something like that. Then we raised the seed round a year since we founded 1.5 million round. That was led by Lifeline. And then we raised this latest 11.2 million euro round, kind of with new investors and participation from the old ones, etc.
Okay, so pre-seed, seed, and then the latest, a Series A, 11.2
Exactly.
million euros. So a nice size round. So tell us, I mean, 3.5 years in, tell us a little bit about that journey for the Series A.
Yeah.
Was there a trigger? Was there traction, milestones that you hit or wanted to hit before you raised additional capital?
Yeah, for me, it was always like ARR growing as fast as possible. Like the very first round we ever did, that kind of 125K, that didn't need traction. That was like, hey,
Mhm.
we were raising money from our friends. The second round, the seed round, that required we had like 100K of annual recurring revenue and like a product we could barely show up. The product back then was still really bad. And that's when we raised the kind of seed round. But now for the kind of Series A, we kind of started the process at 1 million of ARR. And then we kind of really kicked it off at 2 million. And then by the time the process was finished, we were at 3 million of ARR. So that probably helps when you're talking with the investors. They're like, yeah, okay, the ARR has tripled during the process. So probably still going to continue growing. That's
Oh,
always
yeah, I appreciate that transparency because I just today read a interesting LinkedIn post about the Series A raise in that previously maybe you could hit 1 million ARR and okay, let's go for a Series A.
yeah.
And it sounds like maybe you kind of started thinking about it, but really it was in that 2-ish million ARR and saying
Yeah.
like kind of the bar is raised for a Series A, maybe you need a little bit more traction, a little bit more ARR.
It's either that or we're bad at fundraising, one of the others. So it's at least when we tested it out with like 1 million of ARR, we got like interest, but like a 10 million round would not have happened. We probably some type of round would have happened and you could have called it a Series A, but like a 10 million plus round would not have happened, at least for us in
Mhm.
the space we're in. But it's hard to say. It's very dependent, obviously, on relationships and that kind of stuff. So the investors that ended up investing, that we have like good relationships with them. So it's always hard to say how big of a part of it is the relationships you build with the investors and how big a part of it is the actual traction and the numbers.
Yeah.
Hard to say the balance there.
Yeah, and you mentioned, well, maybe who knows? Did we do good or bad with this, with this round? But any lessons learned in that Series A process for other founders who may have a little capital thinking about that big
Yeah.
Series A
So
raise?
like my top of mind that I got, because I always thought like, ARR growing, that's the number one most important thing. But all the investors that actually kind of move forward in the process, we had like pre-existing relationships or something that strongly connected us with them. And like, I don't know if it's randomness, but like no, all the other investors kind of somehow died into an investment committee or somehow died in some part of the process when you didn't have that personal touch there to really push it forward. So that was like surprisingly important, at least in our cases. But maybe it's randomness, but at least in our case, like relationship building was surprisingly important part of the process and not just the ARR, which we had historically focused on purely.
Okay, so maybe, and that comes up a bit, that founder investor fit, where they really understand your mission, what you're after, and also just that intangible of you're building a great relationship. It
Yeah,
sounds like.
exactly. And it's very intangible of like, okay, sometimes it's tangible. For example, one of the new investors, we went to the same school. It helps, that kind of stuff. But then it's also the like intangible stuff of like, we just kind of like each other. It's fun to
Mhm.
hang out with them. And that kind of stuff played a surprisingly big role, at least in the results. But I don't know if it's like how defining it actually was, or was it just that like, hey, because the ARR was growing so nicely, that's why we got the nice investors that we really wanted to as well. I don't know.
Yeah, hard to say. But in at the Series A round, I mean, how important were numbers to this? Metrics or retention. What did
Yeah.
they want to see besides like, hey, yeah, ARR is growing really fast. Show us some other
Yeah.
stuff too.
Yeah, well, obviously, net revenue retention, gross churn, the very classics, usage metrics somewhat, but like product usage metrics are always very hard for investors to say, like, okay, a customer logs in, let's say on average once a day. Is that a lot or not a lot in this industry? That's very hard to say. Obviously, the development can be seen, but then the product is developing so fast, so the numbers aren't really comparable. So in reality, it goes back to very basic figures like ARR, net revenue retention, gross churn, upsell. Those are the core things that, at least for us, and be determining. But like, I was fairly surprised of how much the like figures were a check mark for a lot of investors instead of like the driving factor. So the driving factor ended up being like, hey, the industry, what they thought about the space, the personal relationships, instead of the figures. And the figures were a check mark for many investors. That was surprising for me. I would have thought it's the other way around. They're like, hey, the industry is like somewhat interesting. They're doing approximately the right thing. The team is approximately correct. And the figures are great. That's what I thought it's like. But it was kind of the other way around.
Yeah, that is interesting insight because you think, yeah, the metrics would help, but maybe it's just, all right, they have minimum thresholds. As long as
Yeah.
you don't come to them with 50% net revenue retention, you've good retention. Now it's still more about, the TAM you're after, your story,
Yeah.
you know.
Exactly. And I feel like it's obviously, I get the point also. It's hard for investors to say like, okay, they're growing 20% a month, or if they're growing 10% a month, both are great figures. But like, they are wildly different companies. A company that's growing 20% or 10% a month. And it's like, but it's hard to put like that feeling in your head, like, hey, this is an amazing feat to grow 20% a month, and this is just like solid 10%, because they feel so similar. But those are wildly different outcomes in a year's time.
Yeah. And I want to talk a little go-to-market motion because it's interesting because you're helping, in essence, your customers with their go-to-market, finding, targets, finding buyers. But tell us how you're finding your customers.
Yeah. So we have a very classic style of like, we get meetings through SDRs and we get meetings through our marketing inbound machine. And then we have a team of account executives that take the meetings. And then the account executives handle those meetings, and then it typically moves on to a CS person. Sometimes it's the same person as the sales team, but you get the idea. So a very
Mhm.
classic model there that we run. Probably the more interesting parts is that we have like a sales team in the US, and then we have a sales team in Europe. And everybody just works. It's just based on time zones. It's not like the Finnish team takes US meetings, the US team takes European meetings. So that's kind of how our system works. And that's mostly randomness where we found the right people. But like that's how we've built it, and it works well and time to scale, I guess.
Okay, well, that's great. Yeah, time to scale it up. So that classic outbound motion, it sounds like. And then let's talk pricing. And don't need exact pricing, but is your pricing model a subscription basis? Is it usage,
Yeah,
overage? Tell us a
it's a
little bit.
classic SaaS product where you're paying like X thousand of dollars for a license per year. Very classic. There's some modularity to it and some contact credits, etc., that can cost extra. But the very basics is you pay extra X thousands of dollars a year to get a license.
Okay, so kind of classic SaaS subscription, X $1,000 per year to get that. And are you, with these platforms and data platforms, are you invoicing annually or is it a monthly invoice?
Both work.
Mhm.
Both work. So we can do. I think we have one. Our longest upfront is like 5 years upfront is our longest one, and then the shortest ones are monthly. But it's
Okay.
always like a yearly contract typically. But then it's
Okay.
monthly payments are possible, but that typically affects the price, etc., etc.
Yeah. And I ask that because it seems like, when I've seen other, say, platforms where you're going in, trying to, pulling data out of the system, where some people kind of come in for a month, use it, and then they're gone. Do you have issues of, maybe long-term users in the segment that just comes in for a little bit and then they're gone? Maybe they're back a
Yeah,
couple months later.
it's an interesting space because especially because we're doing like M&A related things, it's very common in our industry that you have a project, you use it a lot for a week, and then you use it again in 6 months, and you're a super
Mhm.
happy customer because you need the product every 6 months. And I feel like that's the kind of thing where we just have to like know our customers, like, hey, this is the type of customer that needs it every week, and this is the type of customer that has a project every other year. And it's a
Mhm.
good example also, like, I don't know, like let's say you're a small boutique one person business brokerage, you'll have use for it every now and then,
Mhm.
probably every month. But on the other side, you might be a private equity person whose sole purpose is doing deal sourcing. You're going to be using it hours every day. So that's just more of a pricing thing for us. I'm like, okay, we have to price it accordingly for both of these use cases, but they're like both very core customers for us.
Okay, yeah, good to hear. Yeah, appreciate that insight. And then Nilo, at this stage of your business, about 3.5 years in, do you have a favorite number? Maybe it's an operational metric or financial metric that you're focused on to guide the business?
My favorite number? It's
Or a number
yeah,
you look
I
at often?
I have one that I've made up myself, like a
Uh,
number, not a standard one.
mm,
We call it like the revenue per demo, basically. Like whenever our salesperson goes into a meeting with a customer, how much ARR on average does that bring out? And it's a fun metric because it's not about like how much our salesperson grinds meetings for themselves, and it's not about like how much you work. It's about how good are you in those meetings with the customers, and how much do you win your cases against their competitors and that kind of stuff. It's more skill based than like how hard you try. So it's a fun metric for myself and guides a lot of our sales actions, and it's fairly unique. So it's at least I haven't heard of it before. So
yeah.
I like it because I made it up myself, I think.
No, I like that. That's great. So revenue per demo. I love that. So let's wrap up with a few stats and figures. So do you have a company headquarters location?
It's officially headquartered in Finland, but like most of the customers are in US and we have a team in New York there.
Okay. So officially in Finland, but most US customers. And
Yeah.
then what's your current team size?
We're like 57 people, I think. I think it's 58 now.
Okay.
In the PR stuff, it was 57. I think it's 58 or 59 now.
Okay. All right. So upper 50s. And then you mentioned you were disclosing some ARR ranges. So, are you currently, you mentioned the fundraising process kind of went to 1 to 2 to 3. So right now about 3 million ARR.
Hopefully soon at 4.
Okay. Okay.
Hoping that, but let's see. It's not 4 yet.
Yeah. Yeah. We'll see how the revenue per demo figure goes. So
Exactly.
yeah, I love that. Well, Nilo, appreciate your time as we wrap up here. Then what's coming up next for Inven?
So there's the stuff that I'm really excited about are big new features for our customers. So in Europe, especially, there's financial data. There's public company financials that are becoming a lot better in our platform. There's new kind of search model nuances that make the search better. There's analytics features. Because we've raised 1.5 million in the past, which means we've invested in their products, I don't know, like $1 million or something. But like with the 10 million round or 11.2 million round, it's a 10x more. So like almost. So we can invest a lot more in the product, and that's going to deliver a lot more value for our customers as well. So I'm excited for that.
Yeah, that's great. Yeah, that's a big round. I've got to figure out where to deploy that capital internally. So, and actually last question before we wrap up. I mean, for these, I assume you've got, proprietary processes, data, and how you search. How do you build up these competitive moats, as, we have these new ways to just automate almost everything.
Yeah, exactly. So it's a fun space that we play in because it's a very competitive space. But it's also very typical that our customers use multiple solutions simultaneously. Like our customers might be using, let's say, call it a pitch book for some purpose, and then they use a Crunchbase for startups, and then they use our tool for a third use case where we are the world's best, like when you have to find middle markets, HVAC companies or whatever. So it's very typical to use multiple tools. So it's kind of like we just always have to be developing our product as fast as possible. So it's as big of a share of the kind of customer value that we really bring, so that eventually we'll get a bigger and bigger share of the kind of spending that they do as well. And I guess that's where we're doing our balancing, but it is a very competed space, and it's the exact like barriers are like debatable, definitely, because you can get like a very small piece that you do really well, and that's very doable. But then getting a larger part, that's the harder part.
Yeah. Well, appreciate that insight. So yeah, it makes a ton of sense. So Nilo, really appreciate your time today, sharing your journey. So if listeners would like to learn more about Inven, where should we send them online?
Inven.ai, that's our website. Go from there and you can book a meeting with our sales team. They're happy to always show you the product and let you know how it works more.
That's right. Boost the revenue per demo. So check out Inven.ai to learn more. And Nilo, appreciate your time and sharing your journey today.
Thank you, Ben. Great. Thanks for having me.